Good evening. It is November 11th, 2010, almost 8 o'clock. By the time this gets posted, it probably won't be up until maybe even close to 9. I'm doing this from a hotel room in South Georgia. So I appreciate those of you who've been following the charts and visiting the website. I just need more traffic. I want you to tell your friends if you think this advice is good. And by the way, it's been fairly spot on for the last 60 days. And to be honest with you, I made some calls way back in spring of 2009. And those of you who know the name that I went by back then on the FAST board will know that I was harping about the S&P 500 back in April of 2009 as a target of 1150, and by the middle of summer I had projected an S&P target of 1340 to 1350. Right now the chart is saying there is a clear target of 1240 to 1250. I don't think that's going to be the top. I think we may go there and then, do some fairly decent correction that'll take us out of the channel that the S&P has been in. But anyway, that aside, since this is the third go at this, I can't remember if I gave you the disclaimer, so let's do it in encapsulated form. Don't trust me, trust your own judgment. I'm not telling you what you do with your money. You need to do what you want to do with it. Don't come to me if you think this chart is right and it turns out not to be. Because you know something? The chart will hurt me too if that turns out to be the case. I want to say a quick thing. Some people, I don't know if that just backed out or not. So anyway, here we go. Some people say that they can predict the market, like Bob Prechter saying, well, the S&P is going to go to 425.2, and they're just full of beans. Prechter hadn't gotten it right in a long time, and he's wrong now. And why do I say I'm right? Well, for one thing, it's been working pretty good for the last 16 to 17 months. Okay. Second of all, Bob Prechter is not relying upon the same kind of stuff that I'm relying upon. He's doing Elliott wave theory, and that's more religion than it is a stock charting method. It really is. It takes a lot of faith to believe in Elliott wave, and you know that when the chart goes wrong after they've done one of their complex wave counts, what do? Well, they come back and say the theory is still perfect. I'm sorry, I just messed up the wave count. Let me go count the waves again, and then I'm sure we'll arrive at the correct wave count. Do you know that there are Elliott wave people who are saying the S&P is going to go below 400? Do you also know that there's wave people who say the S&P is going to go to 5,000? So what does that tell you? It's all based upon interpretation. So let's look at something that's based upon good old style chart reading. The S&P 500. Today we're down 5 and change. No big deal. And I kind of think I see sort of what's going on. And to be honest with you, the markets may trade down a little bit more. We may end up tagging the support line at 1196 or the rising trend line that tomorrow is at 1196 and rises to 1200. If that happens, it wouldn't be the end of the world. There's a couple of things that say that that perhaps this will not happen. And some things are saying it might. What says it might is the fact that we're under this red line that is our mid-channel line. We got above it here, but now we're below it. We may be setting up to test in here. If so, I'm not going to be that scared of a 12 or 13 point drop in the S&P, considering the fact that I'm still holding to the target of 1240 to 1250, and I'm positioned for that target. And if it does go down to 1200, 1201, something like that, or even the high 1190s, I've got a little cash. So I can feel like I could take advantage of that. So we're still in the channel just fine, not a problem. One thing that happened, if we look in a little closer on this chart, let's go to a 5-minute chart. You can see that the sell-off here, when this triangle being a reversal, with resistance at just below 1227. The sell-off actually was in something of, what should we call it, sort of an expanding pattern. My memory fades me right now. There's a very word for this, a broadening pattern. It looked like a sitting broadening pattern. And of course that broke out, and then it back tested and started to come back yesterday, and it looked like it finished the day strong, and maybe we're going to head back up and try to take this line out again. But what happened? No. Remember now, this line was on from the broadening channel. This morning, the market opened weak, came down, and back tested that line. Do you see that? This line drawn across these three peaks, then some panic selling at the end of the day on the 10th, come up middle of the day, back test, start to rally back. Cisco has bad guidance. The market's all open down, and we come down here for a back test. And let me tell you something you might watch for. I'm not saying this is going to happen. I'm just saying you might watch for it. If the S&P gets over the line I just drew at about 1218, then we're looking at potentially on the 5-minute chart a double bottom, because the price level at the bottom here is identical. So if we break out above this maybe tomorrow, then we're looking at an expected move out of that is pretty good. We'd be looking at a move in the low 1230s. And I'm not saying, you know, that there's no way that the chart at this point, there's no way I can honestly tell you that's what's going to happen. But I'm saying that the chart is set up right now to where if we can rally substantially, get a clear breakout above that resistance at 12, about 1218. Let's say if we can get over 1220 with conviction, then we'll probably do a little back test of this line, and we may be heading up for a test of 1232, 1233. So anyway, the good news is, in the big picture, everything is still working. And there's another piece of good news, by the way. When one of these channels and things kind of get drawn out a bit, keep in mind that the top of that channel keeps moving up. So the longer we stay in consolidation in the middle of that channel, when we do get to where we break out, let me go to a 15-minute chart here. When we do get a breakout, then you can see this line is moving up. So if that happens, let's say maybe sometime next week or the end of next week, that might be our implied move to over 1240 right there. So I hope you've enjoyed this, and anyway, good trading to you when you get a chance. Remember, feedchartvideos.com. When I get back in town, I'm going to start doing a little bit more editorializing on the site, and I think you'll enjoy some of the things that I've got to say. And I'm also in the process of putting together a website that will teach, I think in a unique way, some of these charting techniques and what these patterns mean. So anyway, good night to you, and I hope you did all right in markets today, and I hope you do great tomorrow. Take care.